this is one part of the AICPA website. They have a 360-degree of financial literacy. Most of you have seen these different parts of financial planning, tax planning, retirement planning, protection planning, but the CPA Society has this on the CPA website. So good information, and it points out that their society and CPAs have entered our financial service industry. Again, some other reasons why CPAs have entered this is simply shown on this slide, and again, because of time, I'm not going to read this all for you, but the time couldn't be better. CPAs, because of their decrease in accounting revenue, have to reinvent themselves, and the society, their own society, has reinforced that. And they're looking at retaining their clients, not only maintaining, protecting, but expanding it. So the timing, again, couldn't be better to approach them after tax season with a business model through the PAA program that's designed to do just that. Again, this is the cycles of the wealth management. We won't go through that. You can look at that when you have more time, and I'll be happy to discuss that. One of the biggest reasons why CPAs and why the timing couldn't be better is us baby boomers and the different generations and the different, mentality that those generations face. And this will just give you an idea of, the different, we've all heard the baby boomers, we've heard of the mature, we've heard of Generation X, right? Each generation thinks differently, and you have to approach them differently. Last webinar that I did, I referred to the DAD principle, deductions, accumulations, and distribution planning. Because of us baby boomers, all right, accumulations and distribution planning is going to be huge. In fact, this is an article that, points this out. $41 trillion are going to come into play, all right, because of us baby boomers from an accumulation and a distribution standpoint. If that in itself isn't enough to get the CPAs to talk to their clients about this through you, this is huge. Again, the distribution dilemma, the mentality changes. They went from taxable to tax deductible to tax deferred to tax free. But from an educational standpoint, this is what you as an advisor can share with the CPA, because the CPA, again, focuses on tax deductions and tax preparation. Your role through our program is to educate them on the business model. To give you an idea, if I'm sitting down with a CPA and if they're interested in becoming licensed, obviously their revenue, not from accounting, but from non-accounting revenue, is going to increase. And, assets under management is one way. But again, this is the discussion topic, not a requirement of this program. CPAs do not have to be life insurance or registered reps. They obviously have to be licensed or registered reps to share in that compensation. There are other ways to compensate them through non-accounting revenues and non-product. But this is one way you can do it, not a requirement. All right? Again, more statistics that I'll let you read on your own time. The key to this is our program is not a referral model. It is a strategic partnership. It's all about partnership, and this is the model that the AICPA has focused on. And in a little bit, we'll talk about the Moss-Adams study. But again, the AICPA surveyed CPA's existing clients, and this is some of the statistics that the CPA's clients shared. 72.5% would add assets to their accountants to manage if they knew that accountant either provided that service or provided the service through a strategic alliance with an advisor. 63.2% would refer other people to the accountants for investment advice. Those are statistics that are very common to the insurance or the investment industry as well. Our role is to help the CPA put together a marketing plan so their clients and new clients know what it is they do other than tax preparation. So a lot of opportunities. Again, what would it take? Here's a survey that the AICPA did on their own CPA, saying that what would it take for you to become a successful financial service practice? You know, you need strategic alliances. You need a detailed business plan. You need a marketing plan. You need committed partners, committed resources. And one of the things I do with my CPA clients is I use this slide to ask them, are these important to you, and what are you doing about it? And it gets you involved in a discussion with your own CPA. If we could create a business model through a strategic alliance and provide you with a written marketing plan with local support, regional support, and national support, wouldn't you be interested? And again, not all CPA models have been successful. Here's some of the reasons why CPAs have either started strategic alliances through other financial services or left it. Again, you know, it's important to understand that it's not product, it's not transitional, it is a relationship. And, you know, again, most business models with CPAs are flawed, and some of them have not been successful. I believe, based on my 30 years of experience, this is the best one that I've seen. And there's reasons why CPAs kind of are holding back. They're fearful that, you know, they need to learn the products, you know, they need to find a good, objective financial advisor to team up with, and they believe that they have to be experts in all facets of the planning process. That's where our model walks them through. Here's how the model works. Here's the roles of each player. So their role is not to be the expert. And the 200-page training manual that we put together really, quite frankly, answers all the objections that will come up. I mentioned the Moss-Adams study, and I think this is, if you haven't seen this study, I will provide a copy of it to Nicole, and she can provide copies to you. The Moss-Adams was commissioned by the AICPA to come up with a study to show them ways to increase accounting and non-accounting revenue. And one of the things they mention in this is that the world has changed and CPAs need to reinvent themselves. And their perception for their clients is they only provide accounting services and they need to look at non-accounting practices. And it shows a suggested way of doing that, which again that's what our model is based on. So I'm going to walk through real quickly some of these because you can look at these yourself. But the Moss-Adams study is about a 10-page study, a quick read, and if you're going to work the CPA market, I can go into a CPA firm and say, your AICPA society commissioned Moss-Adams to do a study. Here's a copy of the study. Our model is based on that study. Instant credibility. There's other players in this. I'll move through this quickly. You need to do your own due diligence on this, but this presentation is objective, independent. It is, going to lead you to our business model, but from an independency and objectivity standpoint, we want to let you know who the players and who the competitions are so that it'll lead you back to using the Penn Mutual PAA program. The wirehouses have been involved with the CPA business model. Merrill Lynch, Payne Weber, some of the companies have used it. Charles Schwab, Fidelity have a business model for CPAs. Other insurance companies have a business model. Again, we're not fearful of having you being aware of these because we believe our model is the best that I've seen in 30 years. Broker-dealers, have them. But the real bottom line question is, where does the CPA turn? They get this information from their society, they review it, and the question is, they don't have time. They are so busy with taxes and accounting that they're not looking at it from a business perspective. So you have an opportunity as an advisor, because you have a relationship with at least one CPA, to say, I can provide a strategic alliance. We can provide you with a written marketing plan that is really geared at providing value-added services, increasing non-accounting revenue, and I'll show you how it works. So there's different approaches. A lot of us just ask the CPA, say, this is what I do, refer a couple clients. Some CPAs have a division internally, and we believe that there's advantages and disadvantages to each one of those methods. I want to focus on a strategic alliance, a partnership, method, and that's what the PA program does. We'll walk through, this presentation goes into some compliance issues, whether the CPA should set up a separate LLC or a separate entity, for liability, for compliance, for revenue purposes. We have all of that outlined. It's available to the CPA so that's an issue or an objection that's going to come up. So that's part of the model that we provide, because these are the questions that are going to come up, when you're talking to CPAs. Why form partnerships or LLCs? We believe the strategic alliance provides these value propositions. We have technical advice. We have marketing strategies to implement. It's service-based, and it's based on the AICPA and Vision 2011, and you have the ability to implement financial solutions. And again, here are some of the other things that we talk about, and I'm available to actually do webinars, conference calls, and one-on-one meetings with some of your CPAs. I'm based in Irvine, California. Kevin's in Northern California, and we believe the strategic alliance and the partnership we've already done with Provada, this is one more item that we can add to the it's an arrow in the quiver, so to speak. So let's talk a little bit in the remaining time, and then I want to spend hopefully about 15 minutes on our program, and then I want to open it up, to questions and answers. The first segment of this webinar, was really focused on getting you in the frame of mind of understanding how CPAs think, what their challenges are, some of the issues they're facing. And the next 15 minutes is to tell you about our program, which again is called the Professional Advisors Alliance business model. The website is www.professionaladvisorsalliance.com. So what I'd like to do is tell you a little bit about who we are, what we do, how we do it, and why CPAs like this business model. Professional Advisors Alliance, even though it is a business model that is subsidized and was created by Penn Mutual, you will not see Penn Mutual's name on any of our marketing materials. We are a financial service marketing organization. We use advisors through Provada on a local basis to market this for us. I'm a regional marketing director, trained under this program, and it truly did reinvent myself. For 30 years prior to this program, I would go into CPAs from a pension perspective. Now I go at it from a strategic alliance, a business model standpoint. And the key to our success is that we train and implement and are committed to working with local advisors. You're the ones that have the relationship with the CPA. We provide the marketing model to take you to the next step and show you how to work with CPAs.